Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of Wall Street. Today, we're diving into a report that might sound like alphabet soup. It's the N-CSR form from Mutual Fund and Variable Insurance Trust. Don't worry, I'll translate. Think of it as a backstage pass to see how these funds are really doing. And trust me, some of the performance numbers in this report are a wild ride. So who are we talking about? It's Mutual Fund and Variable Insurance Trust, a company that manages a bunch of different investment funds like the Rational Funds. They're based in Huntington, New York, but operate all over. We are going to decode their report to their shareholders, and these reports are essentially report cards on how well those funds did. First up, let's look at the Rational Dynamic Brands Fund. The goal of this fund is long-term capital growth, investing in powerful global brands that dominate in global consumption sectors. Think of it as betting on brands that are part of people's everyday lives. One of the things shareholders care about is cost, and this report shows you exactly what it costs to invest $10,000 in the fund. For the Class A shares, it was $166. This is essentially the expense ratio, or the cost of managing the fund expressed as a dollar amount. So how did they actually do? The report highlights that the fund returned almost 26% for 2024, plus 25.94% to be exact. That's a pretty solid year, outperforming both the MSCI All-Country World Index and the S&P 500. It was a good year for investing in what they call mega brands, these franchises that serve essential consumer and business needs. But what about the long haul? Looking at average annual returns over the last 10 years, the fund has delivered about 10.60% without load, less if you include the sales load, which is a fee you pay when you initially invest. These are returns for the Class A shares, by the way, and different classes have slightly different performance figures. Of course, past performance doesn't guarantee future success, as they always have to remind you. It shows that the fund has 23 holdings and an advisory fee of $545,891. The portfolio turnover, which represents how frequently the fund buys and sells its holdings, is high at 340%, indicating a very active trading strategy. Where is the money actually invested? Almost all of it, about 99.7%, is in common stocks, while a tiny portion is in money market funds. Breaking it down by sector, the largest slice of the pie is in consumer discretionary stocks, making up almost 34% of the fund. This is followed by financials at 18.5%, then technology and consumer staples. So it's heavily tilted towards companies that rely on people buying stuff, but also has a solid base in finance and tech. And who are the top players in the portfolio? Amazon is the clear leader, representing over 14% of the fund. Other big names include Walmart, L'Oreal, LVMH, KKR, Salesforce, Apple, Apollo, and Blackstone. Now, what's changed recently? Not much, actually. It is stated that Thomas Hamel is now a vice president for Mutual Fund Variable Insurance Trust. Let's switch gears now and look at the Class C shares of the Dynamic Brands Fund. Now, while the underlying investments are the same, the costs are different because Class C shares have a different fee structure. The annual shareholder report will contain important information about Rational Dynamic Brands Fund for the period of January 1, 2024 to December 31, 2024. Investing $10,000 in the Class C shares would cost you $243 per year, a bit higher than the $166 for Class A. That's because Class C shares often have higher ongoing expenses but no upfront sales charge. The return of the Class C shares is slightly lower than that of the Class A shares. Class C is 25.05% to be exact. Over 10 years, a $10,000 investment would have grown to $25,677. Again, most of the report is the same as for Class A, focusing on brand sectors and holdings with some minor differences. The material fund changes are also the same as in the Class A report, and the only difference is a mention of the ticker in where to find additional information about the fund. Last on our list for the Dynamic Brands Fund is the institutional share class, and this share class is meant for large institutional investors who typically get lower fees. In this share class, you will only pay $136 per year for every $10,000 invested. That's because they are for large clients, which give them economies of scale. For this share class, the investment return for 2024 was 26.26%, outperforming the MSCI All Country World Index and the S&P 500 Index. Again, similar holdings and performance that is largely attributed to the brand portfolio. The average annual total returns are 14.18% for 5 years and 10.90% for 10 years, slightly higher than the Class A and Class C shares. Net assets $76,920,891. The institutional share class also has the exact same holdings in the previous two classes. Finally, Thomas Hamel becoming a vice president of the Mutual Fund Variable Insurance Trust, meaning the news is pretty much the same across all share classes. Now let's move on to the Rational Equity Armor Fund, and just as before, we'll start with the Class A shares. This fund takes a different approach, aiming to provide equity exposure while limiting downside risk. The costs for Class A shares are $196 per $10,000 investment, which puts the fund in a fairly competitive range, although more expensive than the Dynamic Brands Fund. In terms of performance, the fund gained over 16% during the year. The market saw a significant equity market rally with stable volatility. It is noted that managing volatility during stable periods proved to be very successful. This fund really shows its intended character over time, as over 10 years the average return is about 3.2%, whereas the S&P 500 is about 13%. We can see how this fund tends to deliver returns in market downturns. Fund statistics: portfolio holds 45 holdings and an advisory fee of about $255,154. A large part of the total investment is put into common stocks, 70.2%, and exchange-traded funds, 27.1%. The top 10 holdings include Berkshire Hathaway, both Class A and B shares, Apple, iShares Core S&P 500 ETF, Microsoft, Amazon, and more. Material fund changes, and all is identical to other funds. The Equity Armor Fund continues, and now let's look at the Class C shares for the fund. The cost to invest $10,000 in the Class C is about $272, which is more than the Class A. The returns are slightly smaller, with about 15.80%. The numbers are mostly the same here across the Class A and C, and most of this section is just restated with the same data but a slight difference in the return. Same for material fund changes. All that is similar is about the Rational Equity Armor Fund. Now let's check the institutional shares. Class I has 1.56% expense ratio, one of the lowest across all the different types of share classes, due to the economies of scale involved with servicing large clients. The returns were 16.85%, which again isn't too bad. Similar story here: long-term performance is 3.47% over 10 years. Most of the performance metrics are nearly identical. The end of the report is very similar across all three share classes, so let's move to the next fund. We'll start as before with Class A, talking about the Rational Special Situations Income Fund. This one is focused on income from less common areas of the market. The costs for Class A shares are $209 for every $10,000 invested. In terms of returns, the fund made almost 9%, about 8.68% for 2024, outperforming the Bloomberg U.S. Aggregate Bond Index. Interestingly, they mention being positioned to potentially benefit from either an improving or worsening commercial real estate market. The top holdings are also some more corporate names like Ambac Assurance Corporation, a large part of the portfolio. Lastly, the only material change was that Thomas Hamel is now a vice president for Mutual Fund Variable Insurance Trust. Now let's move on to the Class C shares. Class C share costs are $272 for every $10,000 invested in the same period. Investment results were plus 7.85% in 2024 for the Class C shares. This report is essentially the same. The holdings are similar, the material fund changes are all the same. Now let's move to the last share type for this fund, which is institutional. At $184 per $10,000, the institutional shares were the least expensive of any fund due to economies of scale for servicing these large investors. Returns were 8.95% for 2024, which is on the higher side. Again, top holdings are similar to the other classes. And that we see our material fund changes is again just Thomas Hamel being appointed as VP. Let's talk now about Rational Strategic Allocation Fund, Class A shares. At $76 per $10,000 invested, this has got to be the least expensive fund we talked about today. In terms of returns, the fund gained almost 15% during the year, a bit low considering the market rallies we see today. Here is the performance with a $10,000 investment, about $16,000 at the end of 10 years. For context, most of the other funds we saw were up around 2 to 3x returns. Fund statistics: portfolio holds only 5 holdings and an advisory fee of $0. The money is almost open-end funds and US government agencies. Material fund changes are identical. For the rational strategic allocation fund Class C, not much changes. Higher fees for Class C at $156,100,000 invested. Investment results were slightly lower. Additional information about the fund can be found at the Rational Funds website. Institutional shares has similar performance since they are the same holdings but will be lower fees and the same material fund changes taxed. And lastly, Rational RGN Hedged Equity Fund Class A. $228 seems normal. Achieved a 16.54%. Okay, that was a lot, so what's the big picture here? First, it is important that this document doesn't reflect changes that are coming and as mentioned in the report, and most of the results here are positive. The Dynamic Brands Fund consistently outperformed its benchmarks over the long term. However, its more recent one-year performance numbers did show some underperformance. Most funds delivered results, and as with any fund, it will be very important to diversify in a portfolio. Ultimately, to make a well-formed investment, it is best to get all information and resources from the official website rather than rely on any single financial report. Thanks for watching. If you found this helpful, please like and subscribe for more Corporate Decoder.